Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 28th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The ES in the previous session saw a significant rejection near the 2317s, or really it wasn't more of a rejection, it was more of price pushing down into that area, building a range, and then seeing a massive exodus once that range did not lead to more weakness. The upside pushed back above 53, the 2330s was very, very important and led to a nice rally. But this morning here, we're starting to see a little bit of weakness, especially here in the recent few minutes, where prices rejected the previous session's high price in a downtrending move. That's going to imply at least a move to retest the midpoint of the previous session, 2330. And that's right around the area 2330 half to 2331 half, where bulls really need to keep that zone bid if this is going to lead to a broader reversal back to 2371, the FOMC key level from March 15th. So that's the level to hold. Bears right now have the upper hand short term after defending the previous session's high there, and they're looking to run the stops back below 2330, which would open up a retest of 2317 and beyond. But I did mention one thing: higher time frame. I did mention that we've been trending higher at a very, very rapid rate, big time strength. Any rotation here into this LVN would be seen as a great buying opportunity on a longer term basis, right? So whether this is the rejection we're looking for or whether we come a little bit lower, we're in the zone right now where you're going to begin to see OTF responsive buyers come in and look to defend that area. And as low as 2300, I was looking for 2307 to be reached somewhere in here. We got to 17 half, 1775. So we're very close. So this could be the low, but we have to see how price responds off 2330. Can bulls keep that area bid? If so, there's a great shot to get a bounce back toward 71 to 80. All right, let's take a look here at the intraday time frame. I'll be honest, this reversal yesterday caught us by surprise a little bit here in the trading room. It wasn't a natural rejection like you would normally see. Here's the pre-market low, and then price came in, formed a double bottom here, and then everything just started kind of to squeeze quietly. Then we started to just melt. It wasn't a huge rejection by any means. It was just a big range that formed enough energy and eventually got it going to the opposite side and filled the gap. So at some point we had to switch focus to filling the gap. Eventually you see the gap filled, but now rejection occurring. That's going to be important. Here's that 2330. That's an important zone. So we could see a little bit more weakness into that area, but this is a zone where bulls really need to defend on a swing basis for a shot at seeing higher highs into 2371. All right, let's take a look here at crude. Here's crude oil. It was very interesting how these all turned around yesterday. You had, for example, the ES, you had tech with the NQ, then you had energy with CL, and they all started to form lows down at those areas, but they were box reversals. They weren't rejections. They weren't V-bottom type reversals of any sort. They were all box reversals, and it was very unique, especially in the case of crude, because with crude, I mentioned that 4701 has been a key level to keep bid. Bulls were defending off this rejection off 4760, 4750, but they started to break down below it, and typically that leads to a push against the range into the lows, and it came within 8 ticks, 6 ticks, 7 ticks of that low, and then started to reverse. So there's you don't often see a 3-point reversal here on a low where it's a triple bottom. So you still have a downtrending market. There's still, the stops are at risk here. You have sell stops building below 47s, and really it's going to take getting back above 48, 42, that FOMC level, to really start running some of the upside buy stops into 50, 20, and 5106. So can bulls get established acceptance above 48 half? If not, expect more trading range action with the potential to see a run of the stops below 47s. If we take a look here at the intraday time frame, we did have a nice recovery from the lows here off the previous session. Remember, we were trading down between that major support between 47 and 47.10. That's significant support where we've had major rejections here 3 times over the last couple of weeks. And again, this wasn't a huge rejection. It was more of a box reversal where it comes down here, forms a range, and eventually breaks to the upside and continues higher. So right now, again, if we cannot see an additional push through that 48.5, we have a little bit more upside perhaps today into 48.5. But you're going to have to start pushing through that LVN and pushing through resistance here in order to get it going higher. Otherwise, bears are going to fade, and you could see another return back to 47.09 because that's the range. All right, let's take a look here at the NQ. The NQ also experienced quite a reversal in the previous session. Again, took us by surprise, at least me by surprise in the trading room when it initially started, and then from there we got going to the upside. But for the most part, we mentioned support here before in the previous pre-market report. 53.15 is support here along that support line. You also have bigger LVNs down here. So even if price were to come down here, it could still be a buy. But for right now, this support is holding. And what I mentioned before is that the stops above this high are now going to become at risk because you had bears come in and defend our 53.95 to 54. They got a push into 53.15s. That's where you see rejection. So now you have whoever's still left and whoever hasn't scaled. There's buy stops above 5400. Bears are still going to try and keep it offered right now. So bears are still trying to keep it offered for a shot at dropping this thing lower. Any acceptance above 5400 will run the stops to new highs. So right now that's the major pivot to watch. And if you look at this thing on an intraday time frame, while we may see some more short-term weakness, still the market is poised to the upside. Any major pullback has been bought. You can see again here a major range formed, and then it broke to the upside, and that's when it was on its way to fill the gap and continue higher. And so far we've seen a major release of energy to the upside. The 61.75 is very important. Should price rotate into this area, this could be an area where bulls want to keep bid for a shot at running the stops through 5400. So this is very similar to, I would say, that 2330 in the ES. This is a similar level where you could see the stops get run if bulls can keep it bid. Overall, bears are still trying to keep 95 to 54 bid are offered. So any push into that LVN right here is still going to be rejected by bears. But if they fail to get paid, there could be a huge move underway. So 54 is the major pivot to watch in the intraday time frame and higher. All right, lastly, let's look at gold. Gold here, again, when ES, NQ, and CL were finding bottoms yesterday, GC and ZB were finding tops. So we talked about the stop run that occurred above 1205s, which implied a move quickly to 1232, followed by the potential to retest 1263. Price got into 1261 yesterday, getting within a couple of handles of that final target. So I had mentioned yesterday was we're still bullish. It's still poised to go higher quietly, but we're at the very end of this leg. We're at the very end. And that's the same thing I mentioned here on this day when we got very close, and then we hit the target and never looked back. So again, this could be a zone that could get rejected very, very harshly should it get reached. At the moment, bulls are still in control, and they're still looking to achieve that 63 to 65 target, at which point we could see a major shift in the bias and direction of this market. So a little bit more upside into those targets above, and then we could see some big-time weakness up above. On an intraday basis, you'll notice right now, mostly a range market after the recent rally here. So we have 1255s kind of fading the edges here. Is the best approach. Above 1255 squeezes and then could get you started higher. But right now, bears are keeping 1256s offered, and then fading a new low could be a good approach down here, back up, and that's kind of the range at the moment. But again, if price can get above 1256 and hold, you could have a nice run to the 1265s to 1263 zone. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck, trade well, and I'll see you soon.